What's going on, guys? Henry back with another video, and today I am loading up on Palantir. You guys do not want to miss this because this is going to be literally a huge opportunity as we have seen in the market. And actually there's some really big news. So Palantir specifically fell basically 10%, whereas the market did not really fall. So this is an isolated event. This is exactly what I like to look out for, because when the stock market is going sideways and one specific stock gets crushed, I want to figure out why is it getting crushed and is this a good opportunity? And right now, I believe this is honestly a very good opportunity because Palantir being down about 9 or 10%. So let's just take a look at some technical analysis, and I'm going to tell you why they're down and why this is a reason that I'm currently buying the stock and I'm going to add to my current position. All right, so check it out. Here is the chart right now. I'm looking at a few different factors. One of the factors obviously being the Bollinger Band. Now this stock is bouncing around up and down, back and forth. It's kind of like the airline stocks where it just kind of zigzags back and forth. American Airlines, JetBlue, and Palantir are actually my 3 top stocks, specifically because as it bounces back and forth, this makes it a really good opportunity for trading. Remember, volatility is actually your friend. So many people are afraid, like, oh my gosh, the stock is going up and down. It's actually a good thing. When the stock pulls back, that's an opportunity to actually get into the stock. And one thing that I always look out for is, can I dollar cost average? Because if I can dollar cost average into the stock and reduce my average price, that is a very good thing. So check it out. Palantir right now went from $20.27 all the way down to $18.30. That's a $2 drop. Doesn't seem like a lot, but that's actually 10%. So if I look at the 1 month, it's actually coming down from around the top of its Bollinger Band all the way down to the bottom of its Bollinger Band. The RSI, I do want to say, it's not low, so this isn't like a huge, signal to buy the stock. It's currently at 46, which is about average. Obviously, I'd like to see this at 30, at 27, something like around there would be a really good signal to obviously buy the stock. It's not there, but that's fine. We don't need everything in the stars to line up to make a solid, smart investment. So currently, Palantir stock, 1830. And specifically, the reason why it's down is because analysts are raising a lot of concerns and questions over the Army contract renewal. Now, of course, Palantir makes a lot of money, but it has to really land those contracts. These contracts are worth 50 mil, 100 mil, but if they're not being renewed, then that's not going to make the company revenue, which obviously goes down to the bottom line profit, which is what investors care about. We all want to make money here. Specifically, as investors ourselves, we just want the stock to go up. But what's really happening is the reason why a stock goes up is because the company has better earnings or a better expectation to make future earnings. It's all about the cash. It's very simple. Okay, so Palantir had a strong run in 2023. Obviously, the stock did really, really well. But, there's an analyst, William Blair. He's basically bearish. He's a bear. He is saying that it's going to underperform, but I'm not really falling for it, okay? So there's a lot of analysts out there that are bearish and bullish. That doesn't really mean anything. To me, I'm taking a look at this stock realistically. I'm using logic, okay? And this company has a very positive future. So in the short term, it's not clear. And I can't guarantee that the stock is gonna, keep their $458 million Army contract, which is set to expire. If they don't, that is gonna be a bummer and that is gonna hurt the stock. However, this stock has a very positive future, and I wrote a few specific points, one of them being innovation. Just taking a look at innovation and AI, you guys see that I'm not bullish on NVIDIA, but I am bullish on Palantir because it's a very different valuation. I mean, there's nowhere to go for NVIDIA since it's such a high market cap, whereas Palantir, this stock is not currently a very high market cap. In fact, if I go to summary right here, you will see that the market cap is 40 billion. But can this stock be a trillion? I don't know, but can it be 400 billion? I think so. It can 10x from here. Not saying it's going to be 1 year or 2 years, but a 10x in 10 years, come on now. That's a lot. That's a very huge return, especially if you are playing the stock correctly, right? Using a little bit of leverage. So just taking a look at this stock, what I'm going to be doing is I'm actually going to be dollar cost averaging. You guys can see that I currently have, my average cost being 20. This is not a huge position for me, but this is a great opportunity because I want to make my position bigger. Okay, so I want to start investing in Palantir more, getting my average cost lower because honestly, I made a lot of money on Palantir, but I also did miss quite a bit of a bull run. So I did end up missing from, $14.80 to $20. But if I take a look at the 1-year chart, I did actually scoop this up in the $7 range. But then I ended up selling it, at $13.94 or so, right? So I had this huge run up, but then, I did kind of miss out on this, quite a lot actually. I missed out a lot, but I can't be right on all of them, guys. I really can't. I can make some profits, but I can't be perfect, right? I can't perfectly time the market. Absolutely nobody can. Some people can in the short term, but no one's gonna long term perfectly time the market. It's just not gonna happen. So other points that I wrote here is that the stock lost billions of dollars in market cap. That's literally billions with a B. So it has become a lot cheaper to actually buy this company as a whole. And then just the market in general, again, this is an isolated event. So this is what you want to look out for. If you want to become a better investor, what you want to do is you want to catch stocks that are falling. And yes, some people call it a falling knife, but listen, that's where the opportunity is, okay? You do want to catch a falling knife at some point. A falling knife doesn't mean that it's going to hit the ground all the way. This stock is not going to go bankrupt, and many other companies are not going to go bankrupt. You do want to catch a falling knife. People are like, oh my gosh, I don't want to get hurt. Well, if you don't want to get hurt, then don't even play this game to begin with. But if you want to make money, you have to take calculated risk, guys. You need to get in the mindset of, I'm taking a calculated risk and I'm going to have the correct position sizing. Now, talking about position sizing, you do not want to go all in on the stock. I am loading up on the stock. I'm going to double and maybe even triple my position as soon as the market opens, but I am still keeping my position sizing appropriate. You do not want to go more than 10% in any one position in your portfolio, unless of course it's Apple stock or something like that. I've been teaching and preaching dollar cost averaging. This is the simple stuff that literally people keep forgetting. But if you keep buying high quality companies that are innovating and they're going to rise, then you're going to make money long term. It's not about making money in 1 week or 1 month. It's about making money at the end of the year. How is your year? How is your decade? We are playing a long-term game here. And taking a look at Palantir stock, if I look at the 5-year chart, okay, this stock was over $35 per share back in 2021. Now, if this stock can go there again, that's going to be basically a double on your money. That could take 2 to 3 years. Fine. I don't mind waiting 2 to 3 years if I'm beating inflation by literally multiple times inflation. Because as you continue to build your wealth, what your main goal should be is just to, not only beat inflation, but have a steady, consistent income source so eventually you don't have to work. That's the whole point of life. You don't want to keep working day and night, having a boss. You want freedom. And that's why I'm looking at opportunities that provide freedom. But of course, I want to take appropriate risk. And that's why Palantir is one of my favorite stocks right now. And when I look at analysts, how they're being very bearish, that's a good thing. Because when everyone is bearish and everyone is not enthusiastic, that's when you want to be enthusiastic. When everyone is enthusiastic, like NVIDIA, you do not want to be enthusiastic. It's called being conservative and it's called being a contrarian investor. So I'm going against the grain. And that's where I find opportunity. I want to do something different from the market. That way I can get different results. If you're just following what everyone else does, which as you can tell, if you go on YouTube, everyone covers the same stocks. Everyone covers the same topics. If you listen to that and you're just following a crowd, you are literally being a sheep. So stop being a sheep and do something absolutely different. So whatever everyone else is doing, try to do the opposite. Now, don't do it in a silly way. Obviously, if everyone's buying Apple, you don't want to go against Apple, but you want to look at opportunities that are different, okay? So Apple is obviously, everyone has an eye on them. But when you look at smaller opportunities, there can be a variance in opinions, and that is good because if you do your research, technical analysis, fundamental analysis, you understand the stock and you form a strong opinion, that is where you can really generate alpha. That's where you can make more money than the market. Okay, so just reading this article a little bit more, the analyst also said the Army might offer a 2-year renewal for $116 million with Palantir's revenue reduced by additional vendors sharing in the deal. Basically, even Palantir does affiliate marketing, right? So they have someone that's recommending them and getting them business. They're giving referral fees. And the William Blair analyst is basically speculating that data ownership could be an issue between the Army and Palantir. Data is very important. We'll get into that in just a second. Palantir aims to use customer data to train artificial intelligence models, okay? So guys, that's super important. That's also why I'm investing in this stock, because I have a degree in data analytics. That was part of my degree when I graduated. And data is the new oil. So companies that control data right now have a lot of power, specifically looking at Meta, looking at Tesla, looking at Palantir, even looking at NVIDIA, right? The reason why these companies are performing so well is because data gives you an advantage. And when you have a competitive advantage, that's where you can print money. You can literally kill your competition. Also, Uber beating its competition with Lyft. All right, so data. That is what I'm looking at right now. If I could invest in just one company, it would literally be, other than Apple, it would literally be Palantir because they have such a huge data advantage, as well as Tesla, of course. If I had to make a 10-year bet, this is the stock that's going to have the biggest return. I'm not saying the safest return, the biggest return. So if I wanted to make the most amount of money, this would basically be the stock that I would put a decent size of my wealth into. However, I would have to be very patient because obviously this stuff doesn't take a day or two. So looking at the government agency's biggest customers, Palantir stock edged up Friday after De Palma released a note on the stock market today. Palantir stock fell 9.2%. So again, big fall here. Looking at Palantir's stock, it did hit a 52-week intra high on November 21st. So not that long ago. So as the stock has really strong momentum, this is really important, okay? Let me go back to the technical analysis here because I want to show you what I look out for. So if I go to the 6 months, the sign or the momentum is pretty positive. And by the way, when I worked at a hedge fund, the quant there, he told me that one of the most important factors is momentum, and that has a huge explanation for overall stock market returns. So a good kind of window of time to analyze is that 6-month period. So over the past 6 months, the stock went from 15 to basically right now 1830. So the trend is still positive. However, it has come down. So this to me seems like a short-term blip in performance, which is a good buying opportunity. And then we continue going up. And we've seen that with Meta. We've literally seen with Meta that every time it has a pullback, that's literally the best time to buy. Because if we look at the chart right here, I'm going to paint you the picture of what has happened with Meta over the past 6 months. Every time that it's had a basic fall, especially a pretty big correction here from 316 to 291. By the way, that's not that big. That's only probably about 20% here. That's been a fantastic buying opportunity. Then again, fall here, rise. A little bit of a pullback, rise. Pullback, huge rise. Same thing with Meta. Right now, I would be a buyer of Meta stock the same way because the trend looks the same as it does for Palantir. Every time a stock pulls back, that's the best time to basically get in. Now, 2 last points. First of all, I encourage you guys to subscribe. You guys that are not subscribed, you're going to be missing out on live updates, trades, and advice that I have on this channel. Of course, I'm not a financial advisor, but I would really love it if you would subscribe to this channel. We're trying to hit 250, all right? Then the next thing I want to talk about is, honestly, I think if Warren Buffett was younger, he would be investing in Palantir. And the only reason that we don't see bigger hedge funds investing in Palantir is because it is a long-term play. There's plenty of hedge funds, but more are not investing in it because it is a more longer-term expected outcome. And many hedge funds are just looking at a stock from quarter to quarter because they have a quota to fill. Most hedge fund managers get paid a fee, 2 and 20. It's called 2 and 20, 2% of assets and then 20% of performance. And they're just looking at the short term because these guys want to make a big amount of money short term so they can pay their New York penthouse and whatever else they're doing with their money, right? So a lot of these Wall Street analysts, they're just looking short term. They're not thinking long term because they don't care. They don't even know how long they're going to be in their career for. These people on Wall Street are just trying to make some short-term money, get in, get out. That could be their career. So I want to encourage you guys to think longer term. And honestly, I think this is a really interesting play for you to look into. Obviously, do your own research and make sure that you have the correct position sizing, and also make sure that you not only have a good entry, which I think right now is a good entry, but have an exit strategy. Because this stock could pull back. What will you do if it pulls back? Let me know in the comments section below, and I will see you guys in the next video.